Hello everybody, welcome back to another video. On today's episode we have the G7 summit has collectively voiced concerns regarding the latest development in stablecoins and called them a danger to international financial stability. According to a 13 October draft that was released by the 7-country union, the G7 apparently, was widely critical of the development of stablecoins despite increasing regulatory clarity back at home regarding these projects. According to the draft, the G7 believed that no stablecoin project should begin operation until the legal, regulatory, and oversight challenges and risks are adequately addressed. The report went on to state that the stablecoins could eventually be a danger to the financial stability around the world. The G7 is a global group of countries comprising Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States. It is clear that the Libra project from Facebook has ruffled a lot of nerves around the world, and instead of making things better around the world, it may have pitted stablecoins against the world governments. The Libra project may be far from realization right now, but the ones to suffer in the real future due to any stricter regulations will be the stablecoins currently available in the market, including USD Tether, USDC, and Gemini, and others. I would stay away from stablecoins for now and for the following months until there is a better understanding of what's gonna happen with them. If you are a fan of stablecoins and it's convenient for you to trade on them, I would highly suggest DAI, as it's a decentralized stablecoin and no one can shut it down. While instead, when it comes to USDT or Gemini and USDC and etc., they can be shut down if the G7 or another government entity decides to. And trust me on this, if some government entity such as US or a G7 country wants to do something, they have the power to do it. And if they don't have the power, they will find a way to do so. I would therefore stay away from stablecoins. Now, on other news, we have Bitcoin sees a little price boost from long-term bull cross. Bitcoin continues to trade flight despite a bullish crossover of the 100 and 200 period moving averages on the 3-day chart. Daily 4-hour chart continued to call a drop to recent lows below 7,800. A long-term Bitcoin chart indicator has turned bullish for the first time in 3 years. The bullish crossover sees the 100-period price average cross above the 200-period average of the 3-day chart. The last time the chart event occurred was in March 2016. So far, however, the crossover has failed to buy prices, leaving the cryptocurrency in the bearish territory below the widely followed 200-day moving average. That key hurdle is currently located at $8,739 according to Bistam data. At press time, Bitcoin is changing hands at $8,310, representing a 0.1% loss on the day. It's worth noting that MA crossovers between the longer duration MAs are the product of price rallies. As a result, more often than not, the market is overbought by the time crossover happens and the confirmation is followed by a pullback. Hence, Bitcoin's lack of response to the latest bullish cross is not surprising. Further, Bitcoin remained flatline for months following the March 2016 bull cross of the same MAS as seen in the chart below. So let's see the chart of TradingView. Right, so here is where Bitcoin remains flat after the bull cross. That's the bull cross here in the MA. And then we have the 100 and 200 MA. Let's see it here over 200, 100 MA. Right. We all believe that Bitcoin is very bullish at the moment, so I really don't need the charts to confirm that. But I do have to say that for a short period of about a month or maybe less or maybe 2 months, God knows, we will see an altcoin season, and for that to happen I would expect Bitcoin to drop a bit more. So my Of course, this is not an investment advice or anything. At the end of the day, you can do as you please. But from my understanding, from my personal understanding, and this is only a comment, again, it's not financial advice. I would say that we will have a sort of support week or month for Bitcoin to consolidate. And while Bitcoin is consolidating, we will see a few altcoins pumping. And by the time that the pumps have been completed or their phase is done, and by that exactly same time Bitcoin would have done consolidating. So while Bitcoin will go up, then altcoins will go down, and then we'll have a balance or today's balance. So as always, we accept Bitcoin to have at least 80% dominance or 70%, and trust me on that, this number here is not accurate at all, as we have as CoinMarketCapital is taking this percentage from all the cryptocurrencies available on CoinMarketCapital, and that should not be the case. As come on now, how can you expect that I don't know, this coin here has such a market capital? None of these coins have the market capital that they are claiming to, or at least the majority of them don't. And all these numbers that we see here are fake volume, are exchanges, are market makers that are manipulating, I would say, the price. So be very aware, and don't forget what's the target. The target is this coin here. It's Bitcoin and only. So yeah, that's what I would expect from Bitcoin to happen. Let's move on other news. We have Peter Thiel backs 200 million valuation for renewable Bitcoin mining in the US. One company is driving its business plan straight into the Bitcoin wastes too much energy argument and has raised 30 million to do so. That's according to Layer 1 co-founder and CEO Alexander Liegel, which plans to bring wind-powered Bitcoin mining rigs to West Texas early next year. The company is raising a total of 50 million at a 200 million valuation, he said. The idea of Bitcoin crowding out other uses for clean energy reflects a misunderstanding of the market, Liegel explained in a phone call. Renewable energy is still primarily underutilized, so you don't actually have a zero-sum game. The company has so far raised funds for its Series A from Peter Thiel, Shasta Ventures, and other cryptocurrency investors that it has declined to disclose. This round follows a previous 2.1 million seed round that also included Thiel, as well as the digital currency group. Further, Liegel questioned the whole premise that the use of electricity to power the Bitcoin network is a waste. Bitcoin is the only thing that we believe in, and that's what we think can lead to disrupting the financial system, he said, adding, "We think electricity directed to the Bitcoin mining network is certainly a net positive for society." The company is vertically integrated in that it plans to run its own Bitcoin mining facilities in the United States using mining rigs that the company designed and built in-house, and running its own power procurement. "We actually own electricity substations and land property in Texas already," Liegel explained. "We own everything up to our power plant, but I can tell you that it is certainly on the agenda. The last 7 years we think of as mining 1.1, Liegel said, with firms doing little more than racing to deploy the most capital," he added. "Going forward, the market is shifting to a game of operational expenses." And I highly agree with that. Going forward, as the price rises and the Bitcoin profitability drops and halves every 4 years, it means that the miners that will be surviving will be the ones with less operational expenses. Don't mess with Texas. Texas has a major advantage as a cryptocurrency mining location, with energy prices among the very lowest in the nation. I love the place, it's so private market friendly. Bitcoin mining is pretty compelling to people out there because it's pretty analogous to how oil and gas works. Further, 16% of power in Texas comes from wind, according to the Department of Energy. Over 25,000 megawatts have been built, with almost 8,000 currently under construction. That is big. The United States hash rate share is currently below 5%. Our goal is to bump that to at least over 15. Wow, that means a load of terahashes are going to be invested, and therefore the profitability of Bitcoin will drop significantly more. Let's see profitability. Let's see what's the status now. So one S9, I don't know if you remember that miner from Bitmain. It was released last year. Well, nowadays you have terahashes of I think the most recent one was 39,000 gigahash, which is 39 terahash. Let's put a price cost of 12 cents. Usually it's 0.09, but I will take a more average for our viewers, and we'll add 0.12 kilowatt per hour. Let's say 1% pool fees, and at the moment you will be looking at around $3.89 per day, which is not bad at all. Multiplying that with 10 miners, I suppose if you had 10 T9 miners, then you would be looking at around $39 per day. But the difficulty has increased hugely, so I would be very skeptical. I would be extremely skeptical when it comes to mining facility. Of course, as Peter Thiel said here, it will all come down to who has the less operational expenses. Let's move on to our last for today new. We have CoinShares. Blockchain launched gold token network on a Bitcoin sidechain. Digital asset manager CoinShares is putting gold on the Bitcoin blockchain, working with wallet provider Blockchain and precious metal tracker MKS Switzerland SA. The UK-based firm announced on Tuesday a gold-backed network for trading tokens representing digitalized physical gold, a project 2 years in the making. According to CoinShares, the network launches today with more than 20 million in gold held in a Swiss vault to back up its token. Each DGLD token is backed by 1/10 troy ounce. CoinShares chairman Danny Masters said the product's network security is based on the Bitcoin state, with DGLD operating as a sidechain on the Bitcoin network. DGLD combines the stability of the world's most enduring asset, gold, with the security of the world's most resilient network, Bitcoin. Built on a blockchain firm CommerceBlock's Ocean sidechain platform, the DGLD network is notable in that it combines financial security, the Bitcoin network's immutability and Swiss vault storage, while still facilitating low-friction trading. He continued that you can now have the peace of mind of Swiss vaulted physical gold with the same convenience but not the same layers of middlemen as owning a gold ETF. CoinShares says the product is available for both retail and institutional investors and will be available in over 200 countries on blockchain's cryptocurrency exchange, the PIT. And let's have a look what's going on to our top 100 coins. We have Bitcoin at minus 1.09%. That's the 24-hour change. We have Ethereum and minus 1.67%. We have Ripple XRP at minus 0.97%. Let's keep Tether. We have Bitcoin Cash at minus 2.06%. We have Litecoin minus 3.08%. And we have Binance 2.75% gain. And the biggest top 10 loss was from EOS minus 6.26%. I do have to say that it's worth noticing the Bitcoin market instead of a stablecoin or a fiat market, as from what it seems here, we do have some coins that are pumping up, trading of course against Bitcoin. Like Ripple here seems to have a very good potential. And recently Ripple has been announcing like extremely good news, like especially the past 2 weeks. So I would consider it most probably the next pump, together with Stellar Lumens. They have this cup and they are formatting this cup and handle chart, and they look bullish. They look bullish to me, especially XRP and Stellar Lumens. So I will keep an eye on those coins. Again, investing, it's extremely and highly risky. I would never recommend it to anyone unless you know what you are doing. That's all for today, friends. Let's hear again tomorrow. Thank you all very much and have a great day.